What's up, everybody? It's Johnny, and I'm back today to talk about taxes. Tax season isn't fun. For many, it is a very stressful time. People are stressed about how to file taxes, when taxes are due, making mistakes, being audited, and more. One of the most famous quotes of all time is there's only two certainties in life, death and taxes. But what's crazy is we are not actually really taught about taxes in school. Well, today we're back in class, but don't worry. This lesson is going to be very short, very concise, and very to the point. In today's video, I am breaking down personal income taxes. Not only am I going to explain how a personal tax return works, but I'm going to talk about tax brackets and how they work too. This video is part one of a 4-part video series to help understand all the basics of personal taxes. So make sure you click that subscribe button so you do not miss out on videos 2, 3, and 4. All right, here we go. Let's get into it. Mnemonic devices, also known as memory aids, have been used for years to learn things. You may remember learning, "Please excuse my dear Aunt Sally" in math class to learn the order of mathematical operations, parentheses, exponents, multiply, divide, add, and subtract. Well, today I'm giving you a new one. This saying will forever give you the ability to understand your tax return. Yes, the tax return that you need to file every single year for now until forever. So, here it is. I am going swimming in the tropical calm river. Let's say that one more time. I am going swimming in the tropical calm river. Time for the whiteboard. Alright guys, we're here with the whiteboard and we're going to go over the saying, the new mnemonic device. I am going swimming in the tropical calm river. So here we go. Here's the I, and I am going swimming in the tropical calm river. Okay. So what I'm going to do right now is explain to you kind of how a tax return works, all right? And then the second part is I'm going to get into this section here. We're going to talk about tax brackets. So let's just do a snapshot of your personal income tax returns because this is it, ladies and gentlemen. This is it, all right? So income, what does that consist of? That's W-2 forms, 1099s, interest, capital gains, dividend income, rental income. Above the line deductions, okay? Those are things like student loan interest, self-employed health insurance deductions, and more. And I will be doing a video on that. That gets you to your adjusted gross income, okay? The adjusted gross income is such an important number to understand. If you think back to the last 2 years, stimulus checks, credits, those are usually determined based upon what someone's adjusted gross income is. So this part of the tax return right here is very important. After you get to your adjusted gross income, you deduct the standard deduction or the sum of your itemized deductions, whichever is greater. Now, the standard deduction is a number provided by the government and depends on your filing status, whether you file single, married filing jointly, married filing separately, etc. Itemized deductions are things like real estate taxes, mortgage interest, and charitable contributions. And just remember, just as a reminder, this is a video 1 in a 4-part series. So I'm going to dive in these 4 parts into each one of these areas in specific detail. So if you haven't clicked that subscribe button, make sure you do so now. Okay? So at this point, you have your income. Minus your above-the-line deductions get you your adjusted gross income. After your adjusted gross income, you deduct the greater of your standard deduction or the sum of your itemized deductions to get your taxable income. That taxable income is multiplied by your tax rate, which I'm about to get into, tax brackets. Okay, it gives you your tax less any credits like student loan credits are, not student loan credits, educational credits, economic impact credits. There's a bunch of credits that are out there right now, which I'll get into more detail in future videos. Get you your result, okay? So there's your tax result. So again, I am going swimming in the tropical calm river. All right, now you've seen the overview. Again, the saying is, I am going swimming in the tropical calm river. Again, like I said in the introduction, in today's video, we will be focusing on the tropical part of the saying. You hear people all the time talk about, oh, my tax bracket. Oh, I got this promotion, but now I'm in a bigger tax bracket. Now that we're married, we're going to file jointly, so we're going into a higher tax bracket. Some even worry that getting a raise isn't a benefit because they now go in a higher tax bracket. This is due to a common misconception about income taxes. All right, everybody, so I'm going to get into tax brackets and how the U.S. taxing system works, okay? When it comes to taxes, there's two terms that you need to know. First is marginal tax rate, and second is effective tax rate. The marginal tax rate is the highest rate in which your income is taxed. The effective tax rate is your actual tax rate. All right, this is going to make a lot of sense to you in about a minute. I'm going to go through a real life example for you. Okay, so let's say in 2021, a single taxpayer has a taxable income of $75,000. Okay. The tax brackets for single taxpayers are from $0 to $9,950, 10%. From $9,951 to $40,525, 12%. And from $40,526 to $86,375, 22%. That $75,000 will fall here, okay? So the United States has a progressive tax system, which means as your income goes up, it is taxed at a higher rate. So what happens is you have to look at this kind of like three boxes, all right? $75,000 in total income. We fill up all of the 10% box. So $9,950 taxed at 10% is $995 in tax, okay? We fill up the entire second box too, because we're still not capped at $40,525. So $9,951 to $40,525 are taxed at 12%, which results in $3,668 in tax. All right? So now we get to box 3. $40,526 up to $75,000, okay, we don't fill it up, are taxed at 22%, okay? That comes out to $7,584, okay? So the sum of all the taxes is $12,247, all right, which comes out to 16.3%. If you divide 12,247 by 75,000, you'll get 16.3%. So, going back to marginal versus effective, the marginal tax rate in this example, okay, is 22%. But the effective tax rate is 16.3%. Okay guys, so let's recap today's video. Hopefully you now have a way to remember how personal income taxes work, and you also have a better understanding of how tax brackets work. Stay tuned. The next video will be on standard deduction versus itemized deductions. It will be a good one, so don't miss out. Thanks so much for watching, and again, please click that subscribe button, hit like, send the video to whoever you want, because I will be back with more news shortly.